Welcome to Office Hours at TradersPost for September 30th, 2025. I'm one of your hosts, Tom Hartman, Marketing Manager here at TradersPost, alongside Mike Christensen, co-founder and CSO. We're always working to make TradersPost better day in and day out. Each week, we take a deep dive into all things TradersPost, answering your questions, gathering your feedback, and helping you get the best out of the advanced trade execution engine known as TradersPost. To that end, we encourage you to submit your questions in the chat, and we'll get to them by the end of the stream. We've also been soliciting questions from people in support that we'll cover as well. But first, a little bit of housekeeping. We're on part two, episode 2 of our series of how I made $10,000 per month as a Pine Script developer, which, Mike, to be fair, feels grandiose, but I want people to know that within the retail trading space, there's more places to make money than simply trading.
I'm
I
with you.
mean, TradersPost is case in point. Building a piece of software, Peter, you could pull up the page. Building a piece of software that helps to service the retail trading community. We're here to make your life easier, to give you more abilities, more powers. Peter likes to call TradersPost the Jarvis of the Iron Man suit of trading, and I know that's how I feel. But if you're in the retail trading space, you want to use your knowledge and make money from it in a different way. That's the point of the series. So we have the third video and the final video in the series coming up tomorrow, where the first one we gave a general overview. The second one we went through how to actually build up your gig listing and how to actually write it, how to actually deal with clients in such a way as to put yourself above the pack, above the fray. And the third one is we're going to go into the advanced things, tips and tricks of what you can do in order to really sell it. Mike, I'll tell you a number of times the high price packages that I was selling was sold the moment they came on a Zoom camera with me, because I had already invested previously in my communication pattern with them, setting expectations, and how I presented myself when I was on camera. And once I did that, they were like, okay. I mean, literally the 5 other people I just talked to, there's no way I could hire them over you. And that's how they felt. So I want people, now that I'm not doing it anymore, I'm fine with other people taking that money in that space. So the third video will come up tomorrow. We also have Price Action Live, guys. If you're not watching this, you got to. It happens Tuesdays to Fridays from 9:30 a.m. Eastern Standard Time, where we trade live. We trade live in front of you guys, so that you can see what it's like to use TradersPost out in the wild. Regenerate signals from TradingView in order to send signals to strategies connected to prop firm accounts. But that's not the only way you can do it. People trade crypto, people trade options, people trade futures directly from their personal accounts, all kinds of beauty things. So please feel free to go to the YouTube channel at youtube.com/TradersPost, and you'll be able to see all the beautiful goodies. We are looking for people to join us on Price Action Live. So if you think you got what it takes to stand in front of other people and trade live, send us your information, put a YouTube comment, send us a message, an email, and we'll be happy to first vet you, make sure that you're not I go all in on every trade type of person. We already have one of those. We don't need another one. And then you guys could come on Price Action Live. That'll be fun. All right. Well, we have a nice crop of questions that have come in, which we will be touching on by the end of the stream. But first, I wanted to touch on something that we've been going back and forth on, Mike, on Price Action Live, which is the very real differences when you're thinking about developing an automated strategy, or even either automated or manual, when you're trading prop firms. The way you have to think is completely different than when you are, or can be completely different than when you are trading your own personal accounts. There's some obvious things and then some not obvious things. So I thought it might be fun to have a short video here where we go over what I think are the 10 categories to think of, to keep in mind when you are trading prop firms. Mike, I'll just start off by asking you, when you switched from, or when you jumped into prop firms more fully over the last year or so, did you find it was like almost like a, I want to say, culture shock, where you had to like completely rejigger the way that you were thinking, or was there so much that translated over? You be like, I could figure it out once I'm there.
I thought that a lot of what I knew would translate over, but the more time that I spent in the prop firm world, the more I realized that the rules are completely different than the rules that are available in a live futures account. As you know, if you open a live futures account and put some money in there, the main rule that you have to think about is your margin requirements for those contracts and whether you're trading during the regular session or the overnight session. And there are margin requirements for those held contracts that you may have a margin call on, and you have to supplement your account with cash in order to meet the margin requirements. That's the main rule you have to think about. But they don't have any rules about how much drawdown you have in a day or how much you lose in a day. If you want to go open a futures account and put $10,000 in it and go full port on 10 NQ, you can lose all your money in one day if you want to. Nobody's going to hold you back from that. The prop firms have much stricter risk management requirements. And some of those are difficult to wrap your mind around at first, especially the trailing max drawdown. The trailing max drawdown is, to me, the pinnacle of all of the rules that you truly need to understand, especially if it's something between choosing a prop firm that is real time or end of day. The real time drawdowns can be very detrimental if you have a profitable trade that goes into profit and then comes back down and you break even on the trade. But what it's already done is moved your trailing max drawdown up by 500, and that makes it even tighter for you to trade on the next trade. So those types of nuances around risk management have required me to start thinking about my trading in a new way, where instead of focusing on swing trading or trend following, I'm just trying to lock in very small profits and hitting base hits over and over and over again, because that's the only way to kind of like dial in my mind. Now, there might be some other traders out there that can follow trend and manage their drawdowns effectively, but in the past, trend following has always been a high drawdown kind of environment. Mean reversion is even bigger. You know, if you're a mean reverting trader and you're just continuing to buy as price goes down, hoping that it mean reverts back to the average, you're going to have enormous drawdowns. And for many mean reversion traders, they're perfectly comfortable with huge drawdowns. Well, that's not something you can do in prop accounts at all. So there's definitely a big shift there in that kind of thinking.
Especially with the idea that if you were what we were talking about today, this is a Lynn Alden line. I'm a bearish bull. If you have the point of view like we have, that markets generally float up and to the right, especially when you're dealing with the indices, then you can, if you're trading in the bullish direction, it's easier emotionally to suffer a drawdown in your own personal account, because you're like, well, eventually I have an expectation that we should go up and to the right. It's just how much pain I want to take. The idea here of the drawdown within the prop firm account is that nope, that choice is completely out of your hands, and it's that line that you told me months ago, that your account size is your drawdown, that completely changed the way I was thinking. Because I was like, I have $50,000 account. Why am I having such difficulty here? Why am I getting liquidated so much? I mean, I knew technically why it was, but I couldn't understand that I was sizing my positions based on the $50,000 account, not based on a $2,000 drawdown,
That's
which
right.
made the whole world of a difference.
Yeah, same here. That's when I started moving more into trading smaller micros and just sticking with one NQ at a time with very small scalps, because you don't have a $50,000 or $100,000 or $150,000 account. You've got a $2, $4, or $6,000 account, depending on the drawdown that the prop firm gives you and makes available to you. And if you're familiar at all with trading live futures, if you're watching this, I think you would know right away that the minimum I would ever even want to trade a live futures account with is about $10,000, and even that is a small amount of capital to really trade futures contracts, especially trading NQ or even MNQ. Maybe you can get away with some treasury futures, maybe some micro gold or some micro Bitcoin contracts or something like that that doesn't move a lot per point. But trading an NQ is $20 per point. That's a lot of profit or loss with a single dollar move on an index that large. So it's just important to realize that you're not working with a lot of room. You got to keep things nice and tight, keep that risk under control.
A point here that'll come up again on point number 5 when we talk about payouts is this idea that once you add in TradersPost into the mix, and yes, I'm perfectly happy to bring TradersPost into this general conversation because it allows me to aim for, in a sense, smaller profits. Because if I can scale that across 5, 10, 20, 30 accounts, then it doesn't feel like I'm just nickel and diming my trades, right? It doesn't feel like I have to go for broke or get some big amount because I'm scaling out the payouts or the profit that I'm making. I'm not scaling out the risk in the same way. My risk is just the obviously the rules for the account and the amount of money that I pay for access to the prompt firm. So that's great as well. So number 2 here, the idea of targets, clocks, and consistency. So when we're dealing with prop firms, we have to hit a specific profit target in order to be able to get a payout. Now, different prop firms have different rules. Some accounts you have to pass an evaluation first before you even get to a funded account. Other ones you go straight to funding, and they have different prices for that. Some of them have a certain requirement for how many days you need to be in profit for, or how many trades you have to take, or how many days once you have been in the market, and so on and so forth, in order to be able to even qualify for a payout on your account. So if you're used to, in your own capital, having no deadline, you can scale unevenly, you can go up and down, there's no path dependency that you have to worry about. It is a stark difference when you get to to prop firms and you realize that you're following someone else's rules for what counts as legitimate profits. So I had this mistake once in one of my prop firm accounts for passing evaluation for Top Step, where I didn't set a daily profit target. I was like, why would I ever set a daily profit target? To me, that didn't make any sense. So I made a lot on one day, and then when I thought I passed my account because I reached the $3,000 limit, it said, no, now you have to make an extra, what was it, $500 or whatever in order for it to count. I go, I don't understand. I thought I had to make $3,000. No. You have to make $3,000, but you can't have any one day more than 50% of your profits. Because I didn't pay enough attention. So this is when you told me, well, you just use the settings that, or you at least have a mental note that this is my cap for how much profit I could make today, which to me was, I would never think that in my personal account.
Why would you want to avoid profit? This is another shift you have to make, especially as a live futures trader, where some days I may be swinging for the fences and make, $15,000 or $20,000 in one day. You can't do that if your consistency rule says you need a 20% consistency to get to the next profit target of, let's say, $9,000. On many of my accounts, especially with Tradeify, they are direct to funded accounts. So a $150,000 account has a $9,000 profit target, but it also has a 20% consistency rule. Well, 20% of $9,000 is $1,800. If I make any more than $1,800 on a single day, a single day's profit, then I'm going to have to make that hurdle bigger, right? So let's say I make $2,400 on a single day and I divide that number by 0.2. That means I need to make $12,000 in order to get to my next payout target. So yeah, I think dialing in the settings for max profit in a day is another way to stay right in line with that consistency rule that they need.
When I'm trading crypto on my own personal account, if I get to a certain profit and I'm happy with it, I could just walk away with that profit. The idea that sometimes in prop firms, I'm forced to trade again is brutal for me. The other day, I was $16 off a valuation on the account. So I'm like, okay, no big deal. I'll just go into the market, make the $16 and I'll be fine. I put in the trade. I lose $70. I go, wait a second. Now I got to make $70 plus the 16. So then I was like, okay, let me just take a larger position here, so I don't have to be sitting around and waiting around. I don't want to trade. I didn't have a trade set up. I just trying to click the button in order to get the profit. I clicked. Now I'm down $537. I'm like, what? I was almost passing, and now I'm gonna lose this account. And then I have to be like, oh, I have to get, like, I can't just like get in and get out. I still have to. It's sort of like the runner on track. You can't see the finish line as your end. You got to keep running flat out to the end, because the track stars who slow down because they're about to cross the finish line, zoop, get passed by the next person. That sort of effect. Yeah. You got to treat it like you got another 100 meters to go to and just blaze right through, which to me was like, I never even had to consider that before when I was trading crypto.
For sure. The inverse of that is even funny as well. Let's say back to my scenario where you have a $9,000 profit goal and I make $2,200 for the day, and you know that your consistency rule dictates that you've got to be under 1,800. There's some people that will try to purposefully lose to get back to 1,800, but then find themselves in more profit, not wanting the profit, but ultimately ending up in another winning trade. So you go put 2NQ on, thinking this is a good place for a reversal. There's no way it's going to keep going up, right? And you put too long on, and all of a sudden you're up another $400, making your consistency score even harder to achieve. So yeah, there are some nuances here that are tough. That's why I like to lock in the max daily profit on Tradeovate in the settings so that I can't even break that rule. The moment it hits 1,800 in that account, it cuts off the trading, and then I'm done for the day. And then what I usually do is I lower that number down to 1,750. So now every other trading day afterwards, even if it goes a little over, is still going to be below that $1,800 mark.
Beautiful. What a problem to have. Oh, I can make so much more profit. All right, so we have a question in the chat here. It comes from Paul Theriot, who asks, "Are you guys planning on having an app soon?" Well, we do have a hybrid app, right?
PWA.
Right. So you can always save the TradersPost dashboard as an app on your phone, and then handle it that way.
And we do encourage you to do that, because at some point in the future, we're going to implement web push notifications. Now, I'm trying not to get too technical here, but a progressive web app, or PWA, as I mentioned, is basically a web page version of an app. So it's not going to be downloaded from the App Store as you would normally go to install an app, but from your web page, or from your mobile browser, whether that's Chrome or Safari or Brave browser or whatever it is that you use. There should be a 3-dot menu you can access to add the app to your home screen or install the app. And when you do that, it ends up as an icon on your device. You can open it, and now it's sort of a standalone web app on your phone, but it kind of looks and feels more like a mobile application. When that's installed, we can also ask permissions to send you notifications. And then in the future, we're going to make it to where we can actually push out alerts from your trades. So if you have a trade that comes through or a failure that happens, we can actually push a notification out to your phone as well. So keep an eye on that. But I think we will stick with the progressive web app path and make it easier for you to install the web app on your phone. And by prompting it to you. Right now, we don't do any prompts telling you can install it. So we will do that in the future as well.
Back to the list here for differences between prop firm and your own strategies is that you might be willing to be carefree with the blowing out your prop firm accounts. And you think to yourself, well, what do they care? I'm just giving them money. I'm just going to be buying prop firm account after prop firm account. That's no problem. Yeah, well, surprise, surprise. You might get a message telling you, hey, you're abusing the system. What you're doing is we can't accept it, and you might actually be blocked temporarily or banned from opening up new accounts because you're using the max drawdown for your account as your stop loss, as your limit, your liquidation level. So they're looking to these prop firms. Either directly or indirectly, are looking for consistency over time. They're not looking for YOLO traders.
Agreed there. We have another friend of ours in the prop firm trading space, a guy by the name of Nick Joslin, who incidentally we're going to have on Price Action Live on Thursday this week. So he'll be joining us to show his trading style. But he trades a great number of accounts on the TradersPost platform. He is definitely one of our power users as well. And he is very meticulous about reading the contracts from each of the prop firms that he works with. He's very aware of all the rules. He's very aware of what rule violations will prohibit a payout or block a payout from reaching your account. And I think that that's a smart way to think about this. If you're going to play the game, make sure you understand what all the rules are. So read through all the documentation with each of these firms. They are pretty good about putting all of the rules on their documentation pages. It is a lot to read. It's a lot of effort. ChatGPT can sometimes help too. I've done that where I've kind of grabbed all the pages that are interesting to me and have it give me a summary of the things that are important to me. But it is definitely pretty important to read through the contracts of each of these firms that you're engaged with.
I love the subreddits for these prop firms. I read them all the time. You find the nuances, you hit a roadblock and you're like, hey, I didn't know that was a problem there. I saw something in someone's account. I was like, hey, I was actually going to start doing that. I'm glad I read this because it would have been completely not allowed. All right. Number 3 here, holding policies. So the thing that was like one of the big 3 things for me to adjust is that I can't hold the positions overnight. And I have to close the positions out. And so much of my thinking for my strategies before was that, okay, if I don't get out of the trade today, I could always get out tomorrow. The next day, there's a time to get back to my target levels. I know that might not be the case for the prop firms. There's also prop firms who have restrictions as to if there are volatility events, news events, things like that. They might have policies around preventing trading around those times. Whereas in my personal trading, sometimes I used to love the event risk. That's what I wanted to trade: the Fed meeting. I wanted to trade earnings. I wanted to trade the big volatility news. All right, number 4 here for leverage and margin. So there's different types of rules when it comes to well, it depends what asset you're trading with a prop firm. But when you're trading your own money, you're dealing with the rules and the costs surrounding that broker. So when you're dealing with a particular broker, whereas you have to keep in mind there are specific rules that the prop firm is following. Some of them are connected to a broker like Trade in order to execute the trades. Some of them have their own their own models. I'm not sure if I'm going to mention it later on here, but essentially, there's also a difference between evaluation accounts, sim accounts, and live accounts, or funded accounts. And then there's a difference between those funded accounts and live accounts. So there's different types of environments that you might be trading in when you're dealing with prop firms. Whereas when you're trading your own capital, you are dealing with the broker or the exchange rules.
I did want to circle back to the overnight requirement, if we could. There is one firm I'm aware of, I believe it's Elite Trader Funding, that does actually allow swing trades or overnight trades. They're one of the few firms I've seen make this available, but I believe it's just on their direct to funded accounts. I'd have to double check it, but give them a look. I think that's one firm that does allow that.
Cool. Payouts and compounding. Oh, the favorite part for everyone. I haven't gotten a payout yet. Mike has gotten a payout, but payouts are very different. When you are trading your own money, very easy to know. You're up in profit. You can realize that unrealized profit and then take your cash. When you're dealing with prop firms, there could be some hoops to jump through. I've seen stuff where people had to, this is outlier cases, but I've seen stuff where people had to prove how they were trading. They had to prove they weren't copy trading. They had to do videos, send videos in, or explain how the process for how they chose trades. So there's those sort of risks that the prop firms have to mitigate on their end. Makes total sense. They're not in the business of just give free money out to people, and you can imagine that people are out here trying to game the system, so they need to prevent that. But then there are also just the basic rules for payouts: how often you can ask a payout for, how much you can actually get from it, and so on. So, for example, with Top Step, on a 50K account, you can ask for 50% of your balance, your realized gains inside your account. You can ask for 50% up to $5,000. And I believe you can only ask for a payout 5 times. So some people aim to get the maximum amount they can for that express funded account, expecting that by the end, okay, after the 25,000, I'm not going to use that account anymore. I'm going to move on, because they don't necessarily want to move up to the live account with that prop firm. So the payouts aren't infinite, and there's different ways you have to think about structuring your payouts. That makes sense to you. So you might be in profit. Let's say you might be up $3,000. You're like, oh, I can request $1,500 right now, or I could just continue trading, trying to get to $10,000 in order to pull out 5. But you might lose money along the way. I raised my hand. This happened to me. I could have asked for a payout, but I lost that money along the way because I was trying to get to the max amount. So, whereas if it was my own personal account, well, I could have taken a couple of $1,000s out and just continued on with what I had, or even put it back in afterwards to top it off if I wanted to. It's a different way of thinking about it. I want to bring up here again. TradersPost is fantastic for this. You're able to manage risk per prop firm account if you like. So you can have literally your evaluation account tied to subscribe to it to a strategy, and your live account, your funded account, that's also tied to it. And then you can have different risk parameters set to each one, so that they could be treated a little bit differently, each operating on the same signal that's being sent through. It's one of the things I love about that. And I'm looking forward to even more features being added to the TradersPost platform that allows for management of those things. You can also scale your success. So instead of me worrying about, oh, I got to get up to $10,000 on this express funded account because I want to get the max amount of money, I could instead have 3 accounts going and be okay with making less of a profit because I've multiplied that out across 3 accounts. It makes for myself, I think I feel like I can take it on less risk, and I'm able to mentally manage that better than trying to max out a single account.
Yeah, I feel like I've heard that both ways. In some cases, some people will keep adding to their buffer, giving them the ability to work with that drawdown more. And in other cases, I get the idea of taking your payouts when you can get it. So you really have to kind of make that decision for yourself, I think.
That's right. All right. Just a reminder for anyone watching right now, if you guys are interested, you like what you're seeing, please like and subscribe to the channel. We're here to try to make sure we want everyone to be successful. The more the more you're successful, the happier we are. We want to make something, a product that's fantastic for you, and we want to create content that's what you want. So let us know what you're interested in. If you want more prop firm content, just let us know, and we're happy to get more granular details for you. All right, moving on, just to piggyback on what you were just saying here for step number 6, costs and resets. This is very important. You have to count the cost that you're paying for evaluation accounts, for direct to funded, or whatever it is um, uh, for activation of accounts. All that money you have to factor into the success of your strategy. You're not just going for commissions and slippage. Actually have to be like, well, if it took you 10 accounts in order to get to a payout, you have to minus that amount to see if you're actually profitable. Don't just look at your wins. You have to consider holistically the entire cost that it takes to participate in this, which is different than when you're trading. Let's say if you're just trading crypto on an exchange and you put in $3,000 and you're just paying the fee for transactions. You're not thinking about the cost to get in the game. Whereas in prop firms, that can really accrue to large amounts if you're not careful.
To me, it always feels like playing roulette where you only accrue points and you have to reach a certain number of points before you can go request a payout from the cashier. But you're just buying the opportunity to gain points every time and slowly losing over bet after bet after bet. So you really have to have a great edge. But to your point, yeah, I completely agree. This is about comparing your operating costs from a fee cost perspective to the amount of revenue generated as a 1099 contractor with the prop firms, because you are indeed a 1099 contractor now. So now you have to think about how you're going to take that income and offset it from expenses from your operation. The quicker you treat this like a business where the operating cost is the cost of the accounts, the cost to activate the accounts, any market data related tools, or even tools like TradingView or TradersPost, all of those are now operating expenses, and you want to keep those costs as low as possible. So the trick here is really to try to manage our risks so that we can keep the cost of accounts down. Blowing through accounts does not make sense to me.
Right. Number 7, execution stack. So when you are dealing with your strategy, whether you're doing manually or automated, the way you're routing your signal to the endpoint matters. Right. This is the whole kit and caboodle here with TradersPost, where when you're connected, you can connect 5 different types of prop firm accounts all within our software, and one signal can be routed through all 4 of those. Whereas if you are trading yourself, you have to log into the different platforms. You have to figure out how you're going to route your signals through. You have to make sure that it's a consistency there, a reliability there for for those signals. Plus, when they actually get filled, the way that the prop firm fills it might be very different than the way that the broker or is filling it when you're dealing directly with the exchange. Some people, there's a give and take there. Some people think, well, if my orders are, if I'm dealing with, well, I don't want to call anyone by name, but some people feel like sometimes the broker's trading against them, that their orders are being monitored, or that the order book is being used against them. Some people are getting filled by the order flows being filled locally, not at the exchange, and some third parties making money routing the actual trade to the exchange afterwards. So like there's a whole other thinking behind when you're trading directly with your own money, and things to consider. All right, number 8, market access and sizing. So you're restricted to the symbols you can trade when you're dealing with prop firms. Your max position size, time of day, all that stuff comes into play. Whereas when you're trading your own capital, you get to set what you want to set. You can go big, you can go home, you can do all that sort of thing. Whereas when you're dealing with prop firms, that the number of times I've put on a trade and I see a message that says position is beyond my margin size. I go, wait, like allowable margin size for the account. I go, that's not fair, but I want to put on 10 contracts. Why can't I put on 10 contracts in Bitcoin futures? No, I'm only allowed to do 5. So that makes sense there. Number 9, mirroring and compliance. So when you're dealing, well, this is true in general, but there are rules that the SEC provides, or any of the regulatory bodies for exchanges that everyone has to follow. But then there's additional rules that you might run into with prop firms where they have to mitigate their own risks, right? So the idea that you'll open up 2 prop firm accounts, go long on one and go short in the other, can't do that. There's things you're going to have to rules that you're going to have to follow, and so you can absolutely get banned from prop firms. You can absolutely get banned by prop firms, and if you think that there's no system in order to check between prop firms, even, oh, I'm going to do this over here, and I know the prop firm's not going to know anything about it. Think again. That might not always be the case. Information could be shared there in such a way that if you're a bad actor in one space, you can be a bad actor in other places. So be very careful about your reputation and how you're behaving on these platforms. I saw a thing the other day where a husband and wife were trading from home. They weren't even in the same room, but because he went long and the other person went short, and it was the same IP address, because they're at the same location using the same internet access, they both got their accounts banned at the prop firm. And they're like, "What's gives? It was 2 separate people. We were in totally different rooms. We were following different strategies." Like, yeah, but how are we supposed to know that? And then they got banned.
Yep.
Finally, here, the psychology and incentives. So it depends. It can go either way, but this idea of, especially when you're dealing with prop firms and evaluation accounts, you can get confused thinking you're dealing with real money in the evaluation account, and you behave differently when really you're just trying to, I see this achievement in a video game. You're trying to unlock the next step, but some people might spend 3 months in an evaluation account, paying every month for this evaluation account, and you're like, wait, what are you doing? Why are you spending 3 months on an eval? Why I don't want to blow it out? Well, what would it have cost you if you blowed it out on the first month? It would have cost me an extra $50, which you paid anyway. So you have to think differently for there. Whereas you can actually go slow and steady when it comes to your own capital in order to test out different ideas to see that freedom can be reflected in different ways. All right. That's a nice little primer. Some things to keep in mind, some hard lessons I've learned, and Mike and I have learned. If you guys are interested in seeing more of our hard knock lives, more punch in the face and learning things the hard way, you can watch Price Action Live Tuesdays to Fridays, 9:30 a.m. Eastern Standard Time. In a moment, we will come back and we will go over the questions and feedback that we received from TradersPost audience over the last week. But first, a word from our sponsors.
I do ask yourself this. Are you making...
Oh, no, sorry, 1 second.
Sorry, I just want to throw one more bonus round in here on your list, because this is a fantastic list, by the way, Tom. Thank you for adding this. One other misconception that I see show up on TradersPost from time to time is people not realizing that there is a roughly 95% chance that the account you're adding to our platform is a simulated account. So sometimes people are under the impression that when they pay for an account with a prop firm, that this is live capital they have access to. And it is not live capital. Even if you've been moved to a sim funded account, that is still a simulated environment. It's still paper funds. So when they go through the connection flow, we ask if this is a sim funded account or a live account. And we often tell people that it is most common for you to have an eval or sim funded account, because it is. If you've been called up to live by the prop firm, and you will know you've been called up to live, it's a very ceremonious event and they make a big hoo-ha about it. That's when you would add that account to the platform, and it is a separate type of account. But for the vast majority of you, you're going to have an eval or a sim funded account that you connect through TradersPost. And it should be clear that you're not trading with live capital on those accounts. However, real money is at risk, and that is the cost of your accounts. That's where we want to keep our operating costs low. Without further ado, don't let me hold up the show here for our brief interruption, but I did want to throw that last point out.
Awesome.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. TradersPost lets you automate trades using signals from tools like TradingView or TrendSpider, or even your own custom setup. It works with brokers like TradeStation, Trade8, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, adding more strategies, plugging into prop firm accounts, or juggling multiple portfolios, TradersPost handles it. It's built to grow with you. Start your free trial at TradersPost.io. Trade smarter, automate your edge.
Hey everyone, thank you for your patience. Guys, we've had questions come in over the last week to TradersPost, and we are so eager to answer them. If you guys have any questions yourself, you can always feel free to go to feedback.traderspost.io to leave your question publicly over there. Feature requests, bug stuff, testimonials, whatever you like to do. If you want, you can message privately within the chat bubble in the back end of the dashboard. You can go on Discord. We're everywhere. Trying to help you out as much as possible. Hey, you can do it on Twitter too, on X. And we're happy to take your questions from over there. Our first question here comes from Daniel, who says, is it possible to have the strategy set up that I need manual approval for entry, but the exit signal is automatic? So our AI response to this was, yeah, you can do that by setting up two different, that you send one signal for entries to one subscription, one strategy, and then another one for the exit to a different strategy, and one is set to manual and the other one is set to automatic, which would work. The user was saying, well, no, I want it all to happen with one. I just want to be able to toggle all set, and then I could have that there. And I go, totally understand that. People have asked for this sort of thing in the past. I think we are working on a tangential feature to this that might make more granular control between the exits and entries, but it's not something that we have in the platform as of yet. But
it's an interesting idea. But yeah, the manual versus automated submission to the broker is a global feature for the strategy. So correct, you totally makes sense to run two separate strategies in order to do it. It would be two separate webhook URLs. But interesting request. We were talking about this earlier today. We weren't actually sure how many customers are actually using manual approval for entries, and here's one. So there is at least one person on the platform doing it.
Yeah. Next question from Daniel S. asks, can you tell me what limitations there are with the interactive brokers connection, please? I see that it's still in beta. Thanks. So this has more to do with the reliability of the API. Different beta statuses. We might have different accounts that are on beta at any given time, but they're for different reasons. We want to get things in your hand as soon as possible. We want to let you know, hey, things might not work exactly perfectly, even though sometimes they do work exactly perfectly. It might not be the case. And we're looking for more feedback from people in order to see what that's like. And we regularly move things out of beta once they're stable. Interactive brokers, there is an issue with their API where people do get problems where trades don't happen exactly the way that they expect. And so I would imagine Interactive Brokers is going to stay in beta for quite some time.
Quite possibly, unless a new API becomes available. The limitations of the current API are that sessions are difficult to navigate on IBKR. If you log into the dashboard under the same username you use to make the connection to TradersPost, it's going to steal the session away from TradersPost and give it to your session. And so that makes it impossible for us to trade on an automated basis. There's also issues with submitting orders at the same time on Interactive Brokers, and then a whole host of other reliability issues around trading on the same account. So I think it is a good idea to consider other brokers, or to wait for us to continue to work with Interactive Brokers to make meaningful improvements to the API until it's at a state that we can bring it out of beta. In the meantime, we're still getting some issues that we need to continue to work through.
I love Interactive Brokers for like trade analysis, option strategies, building out trade setups. But yeah, the API is brutal to work with. We do have a question in the chat from Avishal, who asks, hi guys, can one implement a time stop in JSON? I imagine you mean that a trade needs to exit by a certain time. You can let me know some clarification there if that's the case. There's no way within our system, we don't have that set up that it exits at a certain time or what have you. But what you can do is set that up in your signal source. So if you have a cron job that needs to run, if you're using PineScript in TradingView, if you're using some other system, you could always send an exit signal to us if you want that trade to exit. If you at a certain time, I know some people wanted to do that before the exchange closes or the prompt firm closes. They want to send a signal 10 minutes before the end in order to exit the position. That's definitely possible, but you have to take care of that on the signal source side. There's also the idea that some people want an order or their orders only to be, let's say they have a limit order on the books, they only want that to be there for a certain while. So obviously you can use time and force in order to set that in the JSON properties, but you might also send a signal to cancel open orders. You'd be like, okay, just wipe all existing orders at a certain time and to clear that from the broker side. All right. If there's anything else you wanted me to say there, maybe I didn't hit that right, you just let us know in the chat. I'd be happy to clarify. Next up, question comes in and asks, hello, I want to enable 2 subscriptions that I trade on the same instrument, in this case, MES. I've connected them to TradingView. My question is whether these 2 strategies would conflict since they reference the same futures contract. For example, a buy or sell on one may interfere with the other one. That's from Shervin K.
It depends on the scenario. I like these types of questions because there's tricky ways to actually make it work. And then there are ways in which there's absolutely going to be a conflict. For example, let's say I'm trading MES on 2 separate time frames. One is on the 5-minute, one's on the 2-hour time frame. And I get in a long one MES contract in the first strategy, and then I send a signal and I'm long another contract in the 2-hour strategy. And I send an exit signal from the 5-minute strategy. What's going to happen is that exit signal is going to look up your current position in MES and see that you have 2 contracts that you are now long, and it's going to exit the entire position, which means the 2-hour strategy was exited prematurely. So you do need to be careful about how you're managing your entries and exits if there's any level of overlap between them. The suggestion when it comes to conflicts like that is to move these strategies into 2 separate accounts so that we can manage the positions in those accounts independently. If not, you'll have to code in and keep track of your positions within your code in TradingView so that you know how much position should belong to the first strategy and how much position should belong to the second.
All right. Next question comes from Paul P, who asks, why am I getting a login screen for TradeAvate when I try to add NinjaTrader as a broker?
Because the NinjaTrader acquisition of TradeAvate made it so where all of the TradeAvate logins are under the NinjaTrader umbrella. So it's kind of the same product at this point. There are natively aspects of NinjaTrader that are just specific to NinjaTrader, but our system was built for TradeAvate, so you can use your NinjaTrader login for TradeAvate.
Question from Latoya T. When I convert a paid account, will I lose all my strategy and account setups? First time I saw this question. No, if you're on a trial account and you upgrade to a paid account, it doesn't reset your account. You get to keep everything the way that it is and move forward from there.
Yeah, that's a good concern, though. We'll try to make that more clear that we're not going to interrupt anything in your account, whether you upgrade from a trial account to a paid account or vice versa. If you downgrade your account or cancel your account for any reason, we only disable your strategies. We don't actually delete anything from the system. So that gives you the opportunity to get back on board, pay for your account, get back up and running, and simply enable everything again once you're live.
And we certainly don't close your positions, whatever positions you have open.
That is also true.
Yeah.
So you have to be careful, because if you've canceled while you're in a trade and we downgrade your account and you didn't close your positions, and then you send a signal to us, we're going to reject that signal, which means you're going to need to close your positions manually. That's a weird edge case that probably never happens, but that is possible.
I was about to say, we've never had anyone make that complaint. I didn't pay, but you didn't close my signal. Yeah, of course not. All right. This comes from Jody D. Am I able to change asset class from equities to futures under a live brokerage account for TradeStation?
No. Well, as far as I'm aware, TradeStation has separate accounts for asset classes. So you would need to connect your futures account, basically connect another TradeStation account, go through the same process again to connect the broker, choose TradeStation, and then choose the futures account. And now you'll have your stock account, and then you'll have your futures account as well in your TradersPost account. If you prefer to just have the one asset class and you're only limited to one asset class because you're on a starter plan, for example, then you would need to delete your TradeStation instance and then reconnect the TradeStation again and connect the futures account, or edit the broker connection for TradeStation and change the connected account from the equity account over to the futures account. Tom, are you able to demonstrate how you can change your broker for your connection?
Let's see here. I don't have TradeStation.
No, you don't. Let me see if I can show on my side. Let me see if I have a connection to demonstrate the changeover. Shoot. I don't have one. Let me connect TradeStation real quick on my side, and then I'll show you guys what I mean. I do have my own live TradeStation account. Sure.
While he's pulling that up, just to remind you guys, if you have any questions right now, just like Avishal did, you can put them in the chat. We're happy to answer them. And if for some reason we don't get to it before the end, maybe we won't see it or what have you, we'll do it tomorrow, or we'll do it on the next show. We definitely want to make sure that we make TradersPost the best it can be, and for that we need your help. Of course, the best place to go is to feedback.traderspost.io. And if you go there, not only do we get your question, not only is it seen by everyone, but other people can also piggyback on that to either provide more nuance or to plus one it if it's a new feature you want to see on the platform. We go by what you guys say in order to make the platform better and better and better. You might not believe that, but it is 1000% true. So the more vocal you are, the more people you get on your side, the easier it is for you to see what you want in the platform.
Okay, so if I can share my screen here real quick, this will show you that I have a TradeStation connection made here, and I actually have 4 accounts with TradeStation: a live margin account, a live futures account, a paper, and then 2 papers accounts, one for futures, one for margin as well, which would be stocks and options. So if I have both the futures and the margin account enabled, I'm going to see both of those on my dashboard. And let's say that I've created a strategy that connects both of these accounts. Of course, there's going to be a conflict there because I can't trade stocks in a futures account or futures in a stocks account. So I think the question is really aimed at switching between having equities as connected to TradeStation and just having the futures account on the platform. So just edit your broker connection by clicking on brokers, clicking on edit next to TradeStation. You should see all of your available accounts from TradeStation here. And I would just simply disable the margin account. And now I just have my futures account on TradersPost here. That's now going to allow me to connect any other strategy to this futures account from there.
Excellent. All right. I hope, guys, you're not blinded by the power of the TradersPost platform. I know it can be dazzling sometimes, but next,
I know I was.
Next question here comes from Devinder, who asks, do you know any prop firms where trades are not closed every day? Mike did reference this earlier on. It's a possibility that it was an Elite Trader funding.
Yeah, I really want to double check this. They have overnight margin, live elite. I'm trying to remember if it was elite or take profit. I would do some Google searches. I haven't tested it myself either, but I would also like to experiment with one of these firms that allows for swing trades, because just holding a micro since April 9th would have been highly successful.
I know, well, we don't connect with this, but FTMO does allow you to hold. You have to have a special account. You have to choose that specifically as the risk.
Right.
And not only does it allow you to swing, but over volatility events.
Yeah.
Okay. Next up, our last question is from Wallace C, who asks, I would like to know about latency, order execution speed. Is there a difference between the test plan and the paid plan? No, guys. The free trial for TradersPost works just the same as the same technology as the paid ones. So you can rest assured that it's not any slower, any faster if you're using a free account. All right. That's it, Mike, for the questions for this week.
Awesome.
Reminder, everyone, you can go to feedback.traderspost.io if you have any other questions. But for now, we're going to see you again for the rest of the week. We're here every day bringing you the best of who we are, because that's just the kind of people that we are. Very happy to everybody in our Discord group, including the ambassadors there, who are always doing their best answering people's questions. You're doing the Lord's work, and we appreciate it. We'll be back tomorrow for Blueprint. Sorry, tomorrow is for Price Action Live at 9:30 a.m. Eastern Standard Time. We're going to be here on Thursday for Blueprint to touch on how to make money as a PineScript developer, and on Friday for After Hours for market commentary. And we want you there. So like and subscribe. And as always, until then, we wish you happy trading.
Cheers, everyone.